What's up guys, Tom here with another video. In today's video, we're talking about the latest stock market news for the week ahead, along with our technical analysis levels for the S&P 500, Nasdaq, gold, Bitcoin, and US dollar. We just had the jobs reports coming out of the US, and we'll be talking about what this chart means and more for you in just a few moments. Stay tuned. All right, well, one of the places we like to start as a community is always going to be the heat map of the S&P 500 over the last week. And this helps us understand what's moving, what's hot, what's not right now. And that's something that I really want to drum into everybody for 2021. It's something that I use a lot, and that is what's hot right now and what could be hot in the future. So we've seen banks do really well over the last week. Tesla, of course, off that Senate race off, and we saw when that was announced, and it was pretty much a Democratic sweep. We basically had Tesla going bonkers, 24.71% for the week ahead, and one of our favorites, the sleeper hit railroads, also up 5 to 6% over the week. Very nice returns there for these particular sectors. But what I want to talk about is all the sectors as a whole over the last year. And I specifically want to talk about kind of sleeper hits that you can possibly start to analyze in the markets and understand better. So we've of course had our big run out technology over the last year. We've also had our spike up that's come through with energy and financials recently. But I want to talk about healthcare. Look at healthcare. Pretty much since the start of the crisis, healthcare has been zero to slightly up, and then it kind of hovered ever since July into August at around the same return until just recently. And this is something we've discussed on the channel for a long time. So if you haven't already subscribed, definitely consider doing so and finding out more about the process that we go through for this. So healthcare has just had its kind of breakout. You can see here XLV, very nice week over the last week. Other things to note though, that we're starting to have a bit of tapering here in XLI. So the industrials area is starting to basically hover off. Is that now one of the next sectors that's going to be doing quite well? Also, utilities was something that wasn't really purchased for quite some time. It had that run on it, as we can see here, followed by the sell-off and then back to flat. So utilities is another sector that could potentially be offering opportunity for us as medium to long-term investors. You can see here XLY is also going crazy, and XLB, and that's off the back of things like, of course, build outs and, of course, the stimulus checks that are now expected to be upped to possibly $2,000 now that we've got, of course, the Democrats in firm control in politics in America. I also want to talk about growth, value, momentum, small cap, and all of those types of areas. So it's really been the story of the last couple of years of growth. It's also been momentum. They've been the standouts, and you should be, of course, following those types of trends. However, some things have also changed here. We've got small caps doing incredibly well since really November elections, even October, and we've still got a huge decline here in high div yield, low volatility, and of course, value stocks. Value stocks have just been doing terribly over the last couple of years, but specifically since the crisis. This will turn at some point, and value stocks will have their increase. So if you can marry both of those up, potentially there's some opportunity for you. It's just a top-down approach of taking a look at some of the markets for you guys to think about throughout 2021. Another thing to think about is the fear and greed index. So we're now at a 71 greed rating. If we scroll through, these are all the main reasons why those greed ratings are happening. One of the notables I think that's pretty interesting here is, of course, stock price breadth. And we're starting to see stock price breadth since November coming down a little bit. Now, the last time it came down quite substantially, it led to that September, October really sell off. So that's something that if it gets under here and gets back down to around these levels, I would be starting to say, okay, we're in a corrective phase. We're most likely now going to see a pullback in the market as all of the stocks will have to have their cooling off period, because of course the breadth is declining, and that's not usually a healthy type of market movement. But before we get into the technical analysis, I just want to talk about Bitcoin quickly, and I want to just talk about seasonals or events that happen all over the time. So this is 2015, 2016, 2017, and 18 returns for Bitcoin into the Lunar New Year. So the 12th of February is the Lunar New Year this year. That is the Chinese New Year, as many people know it, or just generally a celebration that many Asian countries have. And it tends to be a sell-off period for Bitcoins and other cryptocurrencies. We can see here every year what's happened. We can also see the dates around the 9th of Jan, another dates, 6th to 12th of Jan. other dates, anywhere from 11th to 18th of Jan, we got that kind of sell-off, and then 8th to 15th of Jan. So if this is going to be a reoccurring event with Bitcoin between 41,000 and 42,000, of course, extreme highs, we are most likely going to see a decline occur this week. If we believe in this type of seasonal, this week would be the time that you would generally see Bitcoin decline. And why is that? Because of this Lunar New Year phenomenon, and of course just seasonals playing out. When enough people believe something, it generally does happen, and Bitcoin has a tendency to play that kind of way. We'll also notice that while it declines coming into the Lunar New Year, look at the big pull up that happens after Lunar New Year. It usually starts stagnating before Lunar New Year and then has a big kind of recovery coming off the back of that. So that doesn't mean that there is an opportunity here for Bitcoin investors. It just means that you want to be potentially cautious over the next couple of weeks into the Lunar New Year. And then, of course, usually you're getting this kind of bullish movement coming out of that zone. Very interesting stuff there on Bitcoin. So let's now talk about dollar index. Let's get into the technical analysis together. Here we've got dollar index. You can see here the 20 exponential moving average, even after the US jobs report, did continue to put pressure on this particular pair. Every time it's hit this 20, it's been a decent sell-off opportunity. We've talked about this for weeks on the channel. It's something that we always discuss more and more and more, which is great to do together as a community. The other thing that we want to do though is we want to take a look at the price action structure coming into this particular breakout or this particular increase in the US dollar. So we had resistance, 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 and then we've got this little shooting star here that's been broken and closed up against now. Almost a 2050 cross on the 4 hour, the first one in quite some time. Let's zoom out here. Notice this, guys. The first one ever since November, so since the election. We've had almost got a 2050 cross here on these two moving averages, the 20 and the 50 exponential. But what I like about this is actually a fairly bullish kind of symbol. This usually means that we're going to have further bullish momentum upwards to the next resistance. So maybe this is not the time the 20 holds. And the reason why that is because we've broken through this key level of resistance before. We've done so with a coiling effect that's come through here. We've got a few things that are about to line up. The 2050 cross, the clear break of the resistance, and if Monday can hold and gap and hold around this level, then this should act now, this level here of 90, should act as dynamic support, and we should have further buying pressure on the US dollar. Now, if we have further buying pressure on the US dollar, what does that mean for gold? What does that mean for Bitcoin? What does that mean for silver? Well, it could mean severe declines in all of those kind of currencies or commodities. And in this case, of course, silver and gold copped the brunt of it on Friday. There were some probably overreactions in silver and gold, but they were quite large moves. So we'll take a look at that and more in just a few moments. Let's talk about this VIX though. Well, the VIX volatility index in the S&P 500 over 30 days is still declining. It's still not under 20, so anything can happen. We know that this 20 line, once it's under there, we're in a normal market condition in terms of volatility, and anything above 20 means that we can have these crazy spikes like we've had recently, and if they hold up, that will further cause selling throughout the stock market and of course large moves throughout all commodities around the world. But for now, the VIX remains just above 20 at a 21.6 reading. If we take a look at Bitcoin, we've locked up here a few $5,000 increments. You can see it's trading at 41,236. Now, does it come off this point? We don't know. Of course, at this stage, everything looks incredibly bullish on Bitcoin, and you would be hard pressed to say, okay, I want to sell this particular pair. If you take a look here on a 4-hour chart, you'll notice this 50 exponential moving average has acted as a decent level of buyer pressure. We had buyer pressure here, buyer pressure here. Next time it comes down, possibly buyer pressure as well. So watch that point. It'd be worthwhile doing so if we get another correction. But just remember, Bitcoin is at a parabolic rise, and it's coming into a historically weak seasonal event for Bitcoin. So I think that that is something that I would be concerned about. In general, you don't need to necessarily be concerned about these things, but that is a fairly common reoccurring sell-off kind of event for Bitcoin. So right now the price action doesn't show us that, but possibly we can dial down to smaller timeframes like the 1 hour, look for market structure. We could say, okay, well, there's some key support around here, obviously 2 buying pressure supports. If we do see further sell-offs, possibly get through that zone, close below, retest, sell back down to here, and then of course sell down to that 36,000 where the 50 is. Well, that would be a standard little correction that could happen into the Lunar New Year. Something I'll be watching on Bitcoin, and of course I'll have to dial down to the smaller time frames to watch that. For now though, everything looks incredibly bullish, and there's of course a huge amount of buying pressure coming through this pair. Could we be seeing 45 or even 50,000 before any proper correction occurs? Absolutely. But at any time, Bitcoin will have 20 to 30% sell-off corrections, just like it did down here only recently. This is the type of correction that happens in cryptocurrencies and can be often only 24 to 48 hours long. It's like a flash crash followed by a huge amount of buying pressure support. Very common in 2017 and very common throughout the life of cryptocurrency trading. All right, let's take a look at silver now. So silver has been a standout, pretty good success. And then of course on Friday, a lot of that came undone. We had that movement up here and we were kind of thinking that we'd get towards the 30 zone. Now we've had a flash sell-off on silver after the non-farm payroll result. We basically saw it just get flashed all the way down to 24.50 and then it's come back up and supporting at around 25.32 right now. Now, am I concerned for silver long term? Not really. This is obviously a large move, but this is the type of thing that does happen in these commodities over 2020 into 2021. Silver's known to do this. So there's been some buying pressure coming back over this 25, previous resistances and supports acting as some kind of support. Do I think this is a great buy zone for silver? Not particularly. I mean, it doesn't show us enough good quality structure. We'd prefer to see something like a movement up, followed by a movement down, a higher low, a new peak, and what we call the lightning bolt. So we've got the trough, the peak, the higher trough, the higher peak on a significant time frame, showing us the market's ready to move back up and above. At the moment, all we're seeing is a bit of a flash crash in silver. Same thing for gold. Gold had a massive sell-off. It hit that perfect level. We talked about the 1960 for weeks and weeks and weeks, and this is great. It hit the resistance. It hit the take profit zone. It wasn't able to break past it. Oh well, that does happen. It came down to a pretty good level around here and it just failed to hold it. And I think there's a good lesson here if we go down to the 4 hour. It's hard to catch a falling knife. I totally understand people have bought this 1900. We had resistance, 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 triple resistance, became good support, and there was money there. I mean, there was almost $30 an ounce here in terms of profit that was potential out of this trade. You would have certainly wanted to leave more on though for hopefully getting back to the 1960 or even higher. But when it broke past this low, it's going to go pretty far. And of course, the non-farm payroll result, when it pushed through these two kind of wick levels here at 1880, it just fell off. The liquidity wasn't there. And of course, it was late in the trading session at that point. So we'd be very interested to see what happens with the Monday open on this one. Gold certainly had some pretty crazy moves on it. But overall, still remain bullish here as the US dollar will most likely still continue to decline. And then, of course, that will push up gold and silver. But I think with Bitcoin doing as well as it has been, a bit of money is being flowing out of silver and gold and going into Bitcoin and other commodities. Also seen US oil hitting those targets. It's now trading at 52.61. Some people have their target at 55 here. We always had our target around 50 to 51, and it's in the range now where we're just basically looking at it to see whether there's going to be any resistance sell-offs. And this is just, we're waiting for the price action. So we'll continue to watch that throughout the week, but for oil traders, that's the kind of thing we're looking at. All right, let's talk about the US market. And I've got up here the pivots for the month because we know that R1 and R2 pivots are fairly well respected in the market, especially the monthly pivots. So we've had here the monthly R1 get chomped. You can see this trend line that I've got drawn through these peaks. We're testing that right now, and we've got the monthly R2 pivot, usually the end of kind of the market bull run for that month. It's very hard for a market to get past the R2 successfully at 38.44. So we're actually incredibly close to the monthly R2 pivot. Now, does that mean anything to us as traders? Well, if we have a look here on the SPX, we've also got our daily Bollingers. Now, daily Bollingers, when the market has a tendency to go outside of the daily Bollingers, we often do see a little bit of a sell-off, followed by, of course, usually a corrective movement up. but we're back outside the daily Bollinger. Friday caused outside the daily Bollinger, really heavily outside actually, and that could cause some form of sell-off if it also hits that 38 kind of 40 zone there with the monthly R2. Very interesting points there. We can also see here that the 20 exponential moving average has been holding buyer pressure constantly now for the S&P 500, and that remains kind of the buying pressure zone. Remember, any close underneath this particular moving average is going to signal further selling pressure, and at this point we haven't even had it. We've just had a huge amount of buying pressure slowly melting up here throughout time, and it's about to reach that monthly R2. So a lot going on here on the S&P 500 for the week ahead. We've got outside the daily Bollinger. If we take a look at the monthly, yes, we're still outside the monthly, but we know this is the monthly symbol. It takes ages to be correct. So that's just how it is. And Bollinger is, of course, a lagging kind of thing. And then we've got our weekly, we're still in the Bollinger there. So that's the Bollinger analysis. But I think the monthly R2 is what I'm looking at, this trend line. If we break this trend line, break the R2, then we usually come back down, retest this trend line here from the top down, and then move towards 3,900, if not 4,000 for the S&P 500. And it could be a very, very big January for, of course, returns. We had a look at what usually happens in January, and it's either incredibly great or usually really, really bad. So it's 5 to 6% often each way when we had that 1% plus decline off the first trading day. That's what we were looking at, 5% up or 5% down. Pretty crazy moves there for the S&P 500. Let's take a look at our analysis here on, of course, also the US 100, the Nasdaq. So the Nasdaq still hasn't hit the promised land yet. That's 13,300. We're only about, 170-ish points away from this level. And this was taken by going to the weekly, using the range that had been caused throughout the bodies here in terms of the resistances and the supports, and extrapolating that out. So we're really reaching what is pretty much the point where we expect some selling pressure to come in. We've got the US 100 about to reach the 13.3. We've also got the S&P 500 about to reach the monthly R2, and all of these levels usually act as some form of resistance. So for people that are saying, oh, is there much value left in the market? Particular stocks, absolutely. But when we're taking a look at the market overall, it looks like the S&P 500 at this stage could be stopping in only a few points. It won't be too long. If it continues through those levels, of course, then it goes to 3,900 and 4,000. And for the Nasdaq, that would be pushing things like 13.5 and then, of course, 14,000 in terms of the points. The key psychological numbers are what we're looking at here on the Nasdaq. So there's a lot of interesting stuff. If we do get a corrective phase pullback, where do we expect it to go? Still the 20 exponential here on the weekly. That's going to be the key point. That would push us back down to around 12,000 on the Nasdaq. And that would be a healthy little correction in what is overall a very, very bullish kind of market move. Now that we've got, of course, a democratic sweep as well, the markets should react well in certain sectors like Tesla, and of course quite poorly in other sectors that are not going to do as well from potentially sweeping reforms. But I think 2021 is going to be the story, as I've said a lot, guys, which is everything is going to basically come to a head. We're going to see vaccines roll out, and then we might go back to some form of normality. But when we go back to that form of normality in our lives, I believe that that's when the stock market will actually question, well, what about the earnings? What about these things? What about some of the stuff that's going on? It's often the way that markets do it. When everything's crazy, they go optimistic. And then when everything's normal, they go pessimistic. It's super bizarre, but it's something they do. All right, if you enjoyed this video, please remember to subscribe and, of course, give us a like on the video. It does help us out. And we look forward to seeing each and every one of you at our Monday live stream session for the opening bell for the US markets. Talk to you soon, guys. Bye for now.